Good. So, hello everyone. Welcome to the Crypto Currency Trading Show, which is bringing you conversations and insights from the crypto world and from Wall Street. My name is Pete Harris, and this show is presented by Lighthouse Partners, which is my own consulting, marketing, research, publishing, and events company. And that's the end of the advert. So just going to advance the slide. So the feature for today's show is something called Bitcoin Trading Technology 101, and we've assembled a pretty distinguished panel to discuss that topic. So just before we get going with the program, a few housekeeping notes. We're recording the show so that there'll be a playback available on the Crypto Markets Tech website. That will be up in 24 hours or less, both audio and video. And we'll send out an email when that's ready to all the registrants, so you know it's there. At the end of the show, we'll list a number of ways for you to contact us for later follow-up, and that show will be on the playback as well. That information. Now, in the bottom left of the screen, you'll see a chat box. That is where attendees can type in questions for the panel. You can use that chat box at any time, but we'll actually wait till towards the end of the show to actually address those questions, because some of those questions will probably get answered during the presentations. If we find that we run out of time to get to all the questions, then we'll make sure that we get back to you one-on-one as needed. Expecting this webinar to run for about an hour, maybe a couple of minutes less, maybe a couple more. So with that, as usual, we're going to start the show with what we call our news discussion, which is conducted by me, and I'll be bringing in Ron Quaranta, who's the CEO of Digital Currency Labs, to chat about a couple of news items. So Ron, could you give us a very brief intro to yourself, and then let's just jump straight into the first news item, because it's something that you're involved in. It's called the Wall Street Bitcoin Alliance. Over to you.
I am. Thank you, Pete. So hello, everyone. Ron Quaranta here, currently CEO of Digital Currency Labs, a financial technology and strategic advisory firm with a mandate to help bridge the gap between Wall Street and the world of digital currencies. I've been in financial services and financial technology just under 25 years or so. And getting to Pete's very generous point, I'm very proud right now today to announce the launch of the Wall Street Bitcoin Alliance, a true advocacy group for Wall Street in the digital currency age. So extending the theme of bridging that gap, it's not just about the technology, it's about the people involved in the financial markets and the financial services world. So that is open as a member-driven organization today. You'll see the news later on. And it's meant to guide the dialogue for Wall Street and the financial markets adoption of digital currency.
Okay, so Ron, how is it? What kind of things is the alliance going to do in order to achieve its goals?
Right. So good question. We've already begun reaching out across multiple sectors from a regulatory perspective and a policy-making perspective, but also, at least as importantly from the perspective of financial market participants, is from the technology innovation perspective. So there's no guiding there are many voices in the digital currency and Bitcoin space, and what we're starting to see now is the need for a very financial markets depth of understanding to understand what technologies can be used, how they should be used, what defines institutional, and what technologies are really being brought to bear, and using some level of unified voice across banks and broker-dealers to represent that within the industry. So rather than having disparate conversations or what I sometimes unaffectionately call noise in the industry, it's about getting financial markets professionals to understand the technology and how the technology might be part of their firm, understand what's coming down the pipe from a perspective of regulatory or policy, and understanding what that kind of unified answer should be for now in the future.
Okay, so advocacy is, if you like, a large part of it, but who should be joining the alliance? Because just thinking about this call, there's lots of people on this call who are from the financial markets, who are lots of knowledge about the financial markets, but might not know that much yet about Bitcoin. So is it appropriate for those kinds of people?
It is. So full membership is targeted for financial markets participants, folks working in registered broker-dealers, banks, institutional investment firms, hedge funds, for example. And even if their understanding of digital currencies is very, very rudimentary, WSBA has several strategic partners. One of them is Digital Currency Council. So we have a partnership with them to help our customers, help our members mount the education curve. So there'll be some details on the website. We'll send out some introductory emails for members as well. But we will also act as a conduit to strategic partners to help, again, bridge that gap both in knowledge and understanding.
Okay, great. Now, what's the website people should be looking at?
The website is www.wsba.co.
Right. And at the end of this show, one of the slides will have your contact information so that people can contact you to find out more about it, yeah?
That's great. Much appreciated.
Right. Good. So, so I thought we'd just cover one more news item, something which I think came up about a week ago that we've covered a little bit on the Crypto Markets Tech website, which is something called the Bitcoin Investment Trust. And it's been around for a while, but it's just recently been given the green light by FINRA to trade publicly. I think that's right. Ron, give us your sort of spiel on this and tell us a bit more about it and what your take is on it.
Sure. So the Bitcoin Investment Trust, for those on the call who don't know, has been a vehicle in the works by call him one of the innovators and early movers in the space, Barry Silbert, who not only has multiple investments from the financial markets perspective across Bitcoin, but was the first to advocate some level of ETF. I think this is a good next step in the evolution of Bitcoin being available in the financial markets. I think there's a bit of a misunderstanding in the broader market about what it truly represents. It's not an ETF particularly. It's more like a closed-end fund per se, so there are lockup periods. It doesn't represent the full liquidity we would expect in the world of an ETF, for example. But I suspect it's a good next step. It's certainly caused the price of Bitcoin to spike up a bit. I think it approached close to 300 or so.
Right.
Not long after the announcement of the news. And I think what it also does is it gives impetus for other vehicles to move forward. So the Winklevoss ETF currently under review with the SEC, I would anticipate that might move forward, if no other reason, so that SEC can get on the bandwagon. So a good next step, certainly not where we need to be, but it is moving forward.
Yeah, I think I'll agree with you on all those points. I think when the news came out, there was a big article in the Wall Street Journal about it, and you're right, the price spiked. and the fact that you've got FINRA, involved in understanding what cryptocurrencies are, and we know the CFTC has been very active in the space, so it kind of puts a little bit pressure on the SEC, I think, to get moving and hopefully sort of giving some green lights to the Winklevoss brothers ETF and perhaps some other things too.
Exactly. Nothing like a governmental agency competition to potentially move things forward.
Right. That's good. So I know it's only been a brief news review, but I think we want to move on and get into the main feature panel of the show, which is on the subject of Bitcoin Trading Technology 101. Now, one thing you'll notice as we are discussing this topic, the slides are providing what I'd call some pointers, some takeaways, some homework that the attendees can, if you like, take away and follow up as homework. These are various companies, organizations, initiatives which could give you some useful pointers once you've sort of learned a bit more about where we are with trading technology. I think you'll be able to find all of these companies by doing a simple Google search. If you have trouble with it, finding any of them, obviously email me. My info is at the end of this show. But this discussion is very much about the, if you like, the how to, and not the who is. So with that, I'd like to just start off by making sure that the people on the panel are known to us. Ron, you've introduced yourself already. Garrett, can we just get a quick intro from you, please?
Yes. Can you hear me okay?
Yes.
Yes.
Okay, great. So, again, my name is Garrett Nenner, Managing Director at Rosenblatt Securities in New York. We are quite well known for our market structure and regulatory analysis. My background is in infrastructure and trading, as well as quantitative trading. I'm a former quantitative PM myself. I built trading desks at the major hedge fund in New York, and I've also designed institutional trading platforms for multi-security types for a company called Lehman Brothers and Realtek, if you know that trading platform as well. I've been focusing on Bitcoin and crypto for 2+ years now, and I guess over that time period, I've kind of dove pretty deep, and I'm asked to speak quite a bit in growing amounts to the institutional base, focusing on the technology of trading, and the applications of Bitcoin. Of blockchain. Apologies.
Okay.
So I think it's a very it's a topic that many people still don't understand, and I think this is a great forum for that.
Right. So John, can we get a quick intro from you, please?
Hi, thanks, Pete. John Betts, I'm the founder and CEO of Noble Markets. Noble Markets is an institutional venue for financial institutions and corporations and other Bitcoin exchanges to trade and learn Bitcoin. My background is a combination of technology and Wall Street, and I used to run all electronic execution at Morgan Stanley and later at Goldman Sachs. And the last 6 years been focusing on fintech businesses. Like a lot of people, saw the emergence of Bitcoin. Initially didn't quite understand the value proposition, but looking through and understanding about blockchain technology and how it has the possibility to have some fundamental impact in the way we do business. And Noble Markets is about how do we bring this into fruition and to make this available to institutional clients.
Great. So thanks guys for the intros. So I think as I mentioned earlier, I think it's a pretty distinguished panel with lots of background. So hopefully they'll be able to provide some good guidance and advice on the topic. So let's jump into the first question. I'll ask some questions, and I certainly encourage questions from those listening in to use the chat box to provide to put some questions in too. But first one from me. So despite the fact that Bitcoin's still very much an infant technology, there's really a lot of exchanges have sprung up around the world. But some are very much a consumer focus, while others are really looking to crack this institutional market. So question for all three of you is, what actually makes for a good institutional market? Is it just about volumes and liquidity, or are there other factors to consider? Let's go in sort of alphabetical order and hear from you, Garrett first, and then we'll hear from John and Ron.
Okay. Well, thank you. It's very important, obviously, within the market and being able to trade is stability of the platforms you're trading through, and of course the exchanges that you're trading with. You want to understand their capability. You want to understand their the amount of the volume that they receive and their ability to manage that volume as well. As this market has grown, where did the development come from? We have a institutional market within the equities markets and options, et cetera, that have matured over time. Now, the new markets out there, in some extent, were originally built by developers and programmers who had a great, had great capabilities in designing. But I also think that the current markets, established markets, have a more stable offering. Now, going back to liquidity, when there's liquidity, there's volatility, and there's many platforms out there that are continuing to grow, and also individuals who want to build their own capability to get these feeds and be able to find best price. But you can always find best price, but you can't always find liquidity. And I think there are a few systems out there. Atlas is mentioned here, and a few others that can consolidate. There's one that's missing on this list, and that's called Xgate, EXGATE, which is one of those silent ones that are coming up the pike that have many connections as well, that will offer the similar type of competition to this market. And as this competition grows, which we saw in the equity markets with the ECNs, at first there were, I think there were 25 or so in the beginning. Then you'll see that that amount decrease as volumes find their way to the most efficient markets. So I think in the beginning that we have between the BTCs and Krakens and NitBit, et cetera, it's the ones that are strong, stable, have the flow, have the commitment from the trading base, and also have the I guess it's the again, that stability and security that the institutional space will require. Those are the ones that will rise to the top.
Okay, John, what's your view on this? Obviously, you're one of the companies involved in hopefully providing an institutional marketplace.
Well, I think it's partly the reason why we felt that there was a need for a firm such as ourselves. I think I just posed the question is, what is an exchange? And if we look at why exchanges have been formed across the world, even starting in the the beginning of, let's say, the New York Stock Exchange, a lot of this is around market structure and member behaviors. And I think certainly we've seen the evolution of Bitcoin where a lot of decisions have been left up to technology and where they've been sort of very free markets. But the problems with truly free markets is when self-interest comes in, there's a lot of opportunity for manipulation. And part of an exchange's function is how do you manage that liquidity? How do you make sure it's mature liquidity? How do you manage the behavior of the participants on that marketplace? And so I think that you're certainly going to see a lot of evolution in that space in the Bitcoin exchange market. I think if we start thinking about the other thing that's in there is that you want to be able to see that when you do a trade, that your trades are going to complete and that you'll be able to get the funds and the assets out that you were trading. And I think we've seen some examples with Bitcoin exchanges, obviously Mt. Gox the most notable, where the safety and security of the customer's assets weren't there. And I think so for the institutional players, they're going to need companies and jurisdictions that they can do business with, where they understand the regulatory structure. And I think a lot of this is a lot of big misnomer about regulation just being around money laundering. And that's not the reason why any exchange in the world was started. A lot of this is around the market structure, around the trading behaviors, and ensuring that the customers and the participants are doing business with members that are behaving in a fair and orderly manner, and that they have safety and security of their assets and the completion of their trade. So I think that we're going to see this model evolving, and certainly from the regulation side, more focus around market structure and not just on the money laundering side, where we think the current businesses are a combination of a bank, so a retail bank, a matching platform, broker-dealer, all in one, and how we'll start seeing these pieces devolve into separate institutions that give the customers flexibility to trade across different markets for pricing, but making sure that they have solid counterparties that meet the requirements for them to do business with. And the big impact in that is around back office as well.
Okay, Ron.
Yeah, I would agree with what Garrett and John have said, and I'd add, in the similar importance to define what we mean by an exchange, which is a really good question. I would also suggest that one of the important questions that always needs to be asked is, what are the requirements for an institutional participant? So again, to the earlier volumes and liquidity certainly, and a solid confidence that trades will, clear, for example, quote unquote, and that funds will be transferred. And also, from a product and technology perspective, how are institutional market participants operating? What is the technology that they need? What are the workflows that need to relatively easily be able to integrate with venues like this? And once you start seeing an understanding and integration into those workflows, we'll start seeing, with the growth of some of these exchanges, a wider adoption. You don't necessarily need to reinvent the wheel for institutional market participants. Make it a relatively easy on-ramp for them to be part of these venues over time.
Okay.
This is Garrett. I just want. Okay. I think that also the next step is, for institutions to look at this market. I think part of it is just certainly, like Ron brought up, it's also the clearing. Many of these exchanges, you have to have your wallet at that particular exchange, and that's not to the institutional space. They want it to clear where they want it to clear, and the exchange has to transmit that information to where they want to clear. So that it's a different model that the institutions will be looking for. Yeah.
Right. Yeah. The kind of structure for a lot of crypto exchanges, I think just about all the crypto exchanges right now, is this kind of wallet structure where you deposit your Bitcoin assets, if you like, with the exchange, so that you can actually then use them for trading. It's a little bit different from if you like, traditional securities market. So that's something certainly for institutions to consider. As well as the cash markets out there, one of the interesting aspects of the Bitcoin space, again, because it's young, but it already has a number of derivatives options, futures, swaps, either operating or about to be operating. So from an institutional point of view, what do these kind of operations need to provide to be attractive and useful to institutions? Let's start with let's go the reverse direction this time and do Ron, then John, then Garrett.
Sure. So, in regards to the derivative market, I think that some of what they need to provide, it mirrors the answers in question one, right? Some of those same capabilities from the institutional requirements. Keeping in mind, there are some very smart people involved in the derivation of and the creation of these derivative markets. And from a proposition perspective, clearly there was always a twofold proposition, and this continues creating a series of additional instruments in the Bitcoin ecosystem that are institutional level instruments that they would need to use to participate in this marketplace. And also over time, having those instruments available to trade presumably minimizes or at least mitigates some of the volatility. I think there are still challenges from the derivatives perspective, so things like benchmark pricing, for example, that will be sorted out. But I think in many regards that many of the answers out of question one around what are needed from an institutional perspective port over to that world of derivatives. I find it actually really encouraging that there's these derivatives exchanges popping up as early as they are, because it tells me that what everyone on this call, I suspect, knows, there are some very smart financial markets participants who've been around for a long time with a lot of deep knowledge that are looking at ways to best benefit the ecosystem from the institutional perspective.
Okay, John.
Well, I have to concur with Ron there. I think certainly derivatives play an important part of the capital markets, but at the same way that we have seen abuse of derivative products where there are firms or natural users of derivatives versus those that are purely trading derivatives as a form of profit exposure. And if there's an imbalance there, then the derivative product is going to have an outsized influence on the market. And certainly something in Bitcoin, where the market cap is relatively low, it could have a far greater and outsized impact. And so I think that certainly as the market cap of Bitcoin grows, then having these products in there and having them early. And I think there are some great companies out there in this space that are building products and building regulated products that meet the needs of corporations and financial institutions. And I think certainly if you go back sort of the early futures days, with any kind of commodities, I think certainly there's a good place even for miners to be able to have some stability on their pricing. So I think the more they're able to tap into develop that market at this stage of Bitcoin, I think that will have a very positive impact, and it's going to be an important tool as this market continues to evolve.
Great. So Garrett, your view?
Yes. So, and to John, the ability to trade in options in crypto, that obviously allows people with less amount of funds to really get involved and gain exposure. I think the issue with the institutional space, the immediate issue with the institutional space is even with the hedge funds who have a little more leeway, is they're within their charter where they're not allowed to have exposure to non-securitized items, right? Or securities, I guess, for lack of a better word. And that's where some of these derivatives will come into play. More likely swaps like the SolidX offering and Terra Exchange, a place where you can actually be able to trade them as well. But I think something like that, the swaps arena is something that will make the difference, and it is actually the first step for institutions to be able to start getting this type of exposure to the underlying without actually owning the underlying. And it takes a group that can understand the crypto markets, but also understands the uniqueness and requirements of the institutional space to do so.
If I can, sorry,
yeah.
Garrett.
No, you can.
Well, no, what I was going to say is that I think one of the important things that as an industry we need to be aware of, particularly the venues that are offering these products, is if you look in the traditional capital markets, even for, say, retail investors, and the qualifying criteria for just opening a regular brokerage account for, say, trading equities is different from being able to trade options and other derivative products. Higher net worth and more education that's required, because as Garrett said, yes, you can create greater exposure if you new entrants into the market by using the derivatives, but the opportunity for losses and the opportunity for market impact, especially in a very illiquid market, is very high. And I think that there needs to be greater care about who these products are offered to and the education and sophistication required for those participants. And I think we've seen some examples with certain futures contracts that have been offered on some of these exchanges that have had a big market impact because they had margin calls and it brought the price down, so they can have a big impact to the market, but more importantly to the investors.
Okay, so I think
that's also just to go back. I'm sorry, but in full agreement, yes, and there are certain requirements to allow someone to take the type of risk that options that are that are inherent in those security types. Even the CFTC is kind of standing back. They still want to see what's going on within this market before they start making a ruling. But I think the interesting part is that, as you said, Peter, is that these the rise of these derivatives offering greater access into the markets, into the crypto market, is quite interesting that we're able to make that jump this way.
yeah. So I think the overall message is that it's very encouraging that these derivatives vehicles exist or will soon exist. But like all derivatives, you've got to handle with care a bit. So and we've seen that in the traditional markets, of course. Before we get on to talking a bit about sort of the mechanics, data and technology, just want to briefly sort of touch on the fact that there's also already been a number of indices created for really covering different aspects of the Bitcoin marketplace. And I'm wondering to learn from you guys how you see these indices might be used by institutions. Would be good to get a view on that. Let's start with you, John, and then we'll have Garrett and Ron.
Well, thanks, Peter. One of the big challenges with Bitcoin, was sort of a benefit of Bitcoin, but it creates some structural challenges because there's not a central market, there's not an official price. And for institutions to be able to mark to market, to be able to value their portfolios, having these benchmarks are critically important. So I think that having these indexes out there, I think is going to be, the indices out there are going to be of increasing importance for the adoption in Bitcoin in the bigger market space. And I think it's pretty encouraging, some of the companies that have created that, the fact that some of these indices have been approved by regulators like the CFTC, to Garrett's earlier point, that allows institutions to leverage that as something they can market their portfolios to and meet their charter requirements. And I think it can just help drive further adoption for Bitcoin overall.
Okay, Garrett?
Okay, well, indices are selected, are selected based on your outlook and your expectation of how that is going to help you decide on your strategy and how you're going to mark your returns. So many different types just gives you the opportunity to make your own selection. There are plenty of, each exchange, as you know, has an API, and you can gain their data, get their last price and all that. You can also figure out which, even VWAP, play pricing, which became very big back in I guess that was in the late '80s and early '90s. So it's going to be, well, using these indices is more, I believe, of a personal choice and selection of what that particular industry is focusing. It's great that there's plenty of them, and it gives you the opportunity not to have to build your own. I came, like I mentioned, I was a quantitative trader. I ran a strategy myself, and I had to create my own benchmarks and indices that I was doing based on what my expectations were. So I think it's interesting that there's so many. I'm sure that they will, there are certain ones that probably will stand out as time moves on. And it's also important to the growth of crypto and Bitcoin itself, and figuring out how well it's doing. And
okay,
that's really all I have
Ron.
to say on that.
Sure, thanks, Pete. So, I agree with John and Garrett. I mean, at the end of the day, institutions are going to be looking to use indices in the way they use indices in other markets now for forecasting and strategy development. But to John's earlier point, the requirements around benchmarking and liquidity, those need to be sorted out, and they will over time as we see cash and derivatives venues pop up. But there needs to be a benchmarking basis around the use of some of these indices. So that needs to happen prior to wider usage, I anticipate, by institutions.
Okay. Yeah, I think it's certainly very encouraging to see so many indices and indices covering different aspects already being created. And I'm certainly detecting from just by the narrative that the people involved in creating the indices, they're certainly aware of the need for these kind of benchmarks, and they're also aware of the need to construct them so that they really do reflect the marketplace. I'm not saying they've all got them right, but I think there's definitely the view that they want to get them right. So I think in general, given the fact Bitcoin's still very young, I think it's overall very encouraging that there are lots of cash markets out there, lots of opportunities for derivatives, lots of indices out there. I think it points to could be a very, if you like, robust marketplace, and one that hopefully Wall Street firms will embrace in before too long. Now, to do that, we know that firms are going to need some access to technology and information. And so that's sort of like the focus for the next couple of questions. So in your view, how are institutions going to tap into Bitcoin price data analytics? Are they likely to go to an aggregator, or are they going to be in the business of taking in direct feeds and building their own ticker plants? And will vendors spring up who are actually software companies producing ticker plant software? What's your view on that? Let's start. Let's do Garrett, John, and Ron.
Okay. So looking at pricing and analytics aggregators, et cetera, what is really going to establish which one is going to establish themselves as the optimal pricing and analytics provider? Well, obviously you have to know where are they getting their data from. Are they getting it from one location? Well, right now in this market, I don't think that's the best way to do it. They'll probably have to look at an aggregation, and they'll probably focus on the ones that have the most significant volume, because that will certainly improve. Will show the more tighter markets, and based on the liquidity and activity within those. I wouldn't want to get data on an exchange that's fairly wide and has a small amount of trades going by. You want to get you want to get the more active exchanges. That's where most of the trading is occurring, and those prices, I believe, are more accurate. And the way it was in back in '87, I think, around there, when Rule NMF came into effect. The reason why Rule NMF came into effect in the equities market is because you could trade in many different markets, but you're not always getting the best price. You have to figure out, okay, do I go to ARCA, or do I go to the exchange, et cetera? And you had to make those decisions on the fly. But that also caused wider markets, also caused inverted markets, lock markets, et cetera. So, I think that under that change, the importance is really gathering from the most effective and, I guess, formula source in order to get the correct pricing. So any company, anybody, even anybody on this call can get the API to any exchange and get the live data feed. It's not easy. They're not all perfect in their protocol. But you really want to focus on where the best volumes come from in order to make the best selection on what data you're going to collect.
Okay. John.
Thanks, Pete. I have user and consumer. I think the answer of this is really going to come down to the nature of the traders, the nature of their strategies, and also the evolution of the marketplace. I think it's great that there are companies that have this data and provide analytics. Certainly one of the things that I find is when I'm speaking to new participants that are interested, to be able to have a place to send them to get an overview of the market that can give them the data and sort of the backstory and history that they can use for their models and evaluations is very important. So having high quality vendors out there, and I think something that have been mentioned here is very, very important as more institutions want to move into Bitcoin. In terms of the need for aggregators, I think certainly on the charting and the analytics side right now, there's a lot of value because most of these exchanges because all exchanges right now actually are purely internet-based. The need for having aggregators that have expensive networks around the world to collect this data and deliver that on a service level is not there. There are APIs that you can get today that really connect to all these exchanges so you can get this data yourself. As this market matures and service levels around trading change and latency becomes an issue, then I think that you'll see the need for more specialized aggregators providing service levels around that. And I think also as the market matures, the ability for firms to distinguish between their alpha in creating these connections and normalizing the data themselves for their strategies versus the ability to leverage a commercially normalized feed. And that just once again comes back down to the strategy and where the traders think what's important to them. As Garrett mentioned, there are trading strategies that will work perfectly well on one exchange, and there are strategies that work across exchanges. And I think that although there is the odd opportunity in Bitcoin right now, it's not certainly the largest trading strategy that goes on because there are some other mechanical challenges between trading across exchanges right now, which just can't be done. So I think it's really about understanding a little bit more about the market and understanding where the volumes are.
Okay, Ron.
I tend to think that there's going to be an evolution here over time. I'm just looking at the institutions that everyone on this call and on the panel are familiar with. They almost invariably have a level of technological expertise. And looking at things like Bitcoin price data as in proportion to things like equity or certainly options data, it's very tiny. I would suspect that it's not a significant incremental effort for them to pull in some of this data, at least as they get their toes in the water of digital currency trading. But to John and Garrett's point, as the grows and volumes grow, the need for that level of high-quality aggregated data, these institutions will want to get out of the business of managing all of this data, and that's when you'll see the high-quality aggregators stepping in.
Okay. Yeah, I think just looking back in history to the days of the early aggregators in the traditional markets, and then the early digital feeds. I remember one comment made. Actually, I think the guy's on actually calling into this webinar right now. Actually, but he was a consultant, and he said, I think he said this back in about 1986. He said, digital feeds are great because you can process the data, and they're bad because you have to process the data. So it really is a kind of a swings and roundabouts when you get into the business of taking in feeds yourself. And for some things you absolutely have to do it and you want to do it, and for some other applications you really want someone else to do that heavy lifting for you. And I think it depends a lot on the complexity of the feeds and the number of markets and the kind of trading as an institution that you are doing. So I suspect this will play out in a similar way to, if you like, the delivery of market data in the traditional markets. Not sure, but that would be my guess. Let's move on. Obviously, if you're taking in price data, you're doing it for a reason. You want to execute some transactions, maybe either driven by your own algorithms or maybe on behalf of customers. So really the same kind of question about execution management systems, or EMS. There are a few that kind of exist right now for which I think are pitched to what are generally called serious Bitcoin traders. But will institutions tend to build their own systems, or will they go to, if you like, the EMS vendors that they know from the traditional markets, where they probably already have them installed for some markets like equities and FX? And will those EMS vendors add Bitcoin connectivity? How do you think this is going to play out? Let's go with you, Ron.
Can I jump in on this? It's Garrett.
Oh yeah, sure.
Okay.
I think Garrett wanted to jump in.
Sorry.
Okay.
My old trader habits of jumping in on things. It's we go back to, you're talking about getting an EMS, having an EMS and having it rebuilt within the office, et cetera. And I guess it comes back to the build versus buy, right? You can, I came up against that when I was working with the Realtek product, and it's sense, and it's a return on investment. Why build it if it's already built? I'm coming off at a conference. I spoke in San Francisco at the trading show. I ran a roundtable with, specifically on crypto. And one of the people I was talking to on the panel was like, he goes, I'm spending a lot of time connecting to getting the APIs, connecting to all these exchanges to bring information in, and it's a big cost for me to do that. And I said to him, well, why are you recreating the wheel? If something's already out there, spend your time on your strategy. So looking at institutions first is, you have companies like Bloomberg who say, okay, you can get the data from us, but Bloomberg's not ready to trade this, and I think companies like that are a little too bulky and difficult to use and have the connections you need to really trade the crypto markets. There are companies like you showing up here, Algo and Execution, between the different ones here. I mentioned Xgate earlier, and it pops up here as well. Companies like this are already getting the feeds, and and also allowing you to trade it. I think what's important to know is that, you know, in order to survive as an EMS platform, you need to get access to the multiple markets, but also to have that OMS portion in there where you can consolidate your holdings. Okay, so I'm using 5 different exchanges that I'm trading at. Okay, so, you know, I have X amount of Bitcoin here, X amount of Bitcoin, I have dollars here, etc. Every time I make a transaction, I have to know exactly where I stand. Not every platform can do that consolidation for you, but I think that's very key. And the ones labeled here, I haven't used all of them. If there's a MetaTrader out there that does it, Xgate certainly does. Even Atlas to some extent. I think I think a sticking point that's going to occur immediately in the institutional space is not really on the platform. They might just take in one of these platforms, or maybe get a white label for them to trade this, to trade to trade crypto. But I think the bigger issue is that you have to have multiple wallets. And even though these platforms can trade within these multiple exchanges and using the various wallets that are set up, you need to be able to transfer that coin from one wallet to another. And I think that's going to be a sticking point, because you have to have someone ready to make the transfer when you need to. Is it difficult? No. Once they understand how to do it, set it up, and be able to have it run as a process, then that's when I think things will move faster. And if any of these companies here can do that, well, that'll be a big difference. That'll be a game changer.
Okay, John, I think you wanted to say something.
This is clearly an important part for getting access to traders, and the easier that we can make it for traders to get access to the markets to be able to trade, the better it is for everybody. I think that certainly there's a need certainly for smart order routing, but even other algorithms, impact like BWalk algorithms, market impact, traditional execution algorithms, is going to be good for, or certainly with the low liquidity in the markets right now, and be able to bring in more size in a more automated electronic fashion. And for any companies that are doing this, whether they are companies that are pure crypto, or they kind of in the traditional space, I think it's great. There's going to be a mixture of pure play and best of breed, like in any market. There are firms that have products that specialize towards an asset class, and that's part of their alpha. And then there are other products that their value is because they are across markets and asset classes. And just market needs dictate who the winners are there. The bigger challenge, as Garrett was saying, is that how do you manage your assets across these different markets? And in the current model, having to have your collateral on deposit at these exchanges and move that around, those mechanics on the clearing side are probably more a limitation for effective multi-market strategy. And I think it's going to continue to drive major liquidity on destination markets as we see today.
Okay, Ron.
Thanks, Pete. So a lot of this mirrors conversations that I've certainly been having over the past several months with institutions in the financial markets, and in a slightly self-serving plug, why the Wall Street Bitcoin Alliance is reasonably important to help address this. I think fundamentally, I have with institutions boil down to, for broader adoption, how many of them want a new EMS capability on their desk specifically for crypto? And while there will be best of breed specifically focused on the crypto markets, I think broader EMS, OMS integration with the world of crypto is something that will be needed for wider adoption.
Right. Yeah, I think what I'm hearing... Carry on.
Garrett's got his trader hat on again, Pete. I think you want to say something.
I'm sorry about that. But I think what's also important to note is, it's not just trading crypto, it's the FX as well. And
exactly.
People, right? So you're going to be trading the FX, do a triangular hedge, and if the platform can manage that, that's another important aspect of the institutional, agreed, I guess, acceptance of crypto, being able to do that. Okay. Sorry. Go ahead.
Yeah. No problem. Yeah, I think what you said was actually what I was about to say. That I think, you know, as crypto trading really becomes really just another asset class alongside the asset classes that are traded already, I suspect the execution, you know, systems will, if you like, you know, become all encompassing. So while there might be some pure play ones now, I suspect that in the future they'll become pretty generic, but still very functional. So I've got just one more question, and it's really just a little bit more technical than the previous ones. Just wanted to touch on this, which is certainly for trading firms or even for vendors looking to, you know, operate in this crypto trading space. You know, right now in the crypto space, there are some protocols which are pretty common, used by exchanges. They're mentioned there on the slide. They're pretty different from the protocols that are used, if you like, by traditional Wall Street mainstream exchanges. So, do you think it's going to be the case of you know, crypto exchanges adopting Wall Street's traditional protocols, or will, you know, or will institutions and vendors need to adopt the protocols that the crypto world has really started with? What do you think is likely to be the next moves there? We'll go with John first on that one, and then bring in Ron, and then we'll finish off with Garrett, and then I think we'll see if there's any questions from the audience.
Well, Peter, I think the great thing about Wall Street protocols is that there are so many to choose from. Even when you're looking in the fixed spec, is, you know, there's so many different implementations that's in there, and you know, it's not really about the protocol, right? There's what are you doing in this? Were you talking about, you know, trade, or even moving through the back office? What does the integration look like to any of these markets? And then the big thing is, when you look at the protocols, it's not the wire protocol that matters as much as what you can do with it. Right now, very simple order types, very simple portfolio strategies, and all internet connectivity with latency is not really an issue. I think as the order types and portfolio strategies might evolve, and as SLAs and connectivity evolve, certainly in the case of our market, you'll see that these protocols will move. So I think to a large extent, FIX is great because there are a lot of existing applications that can connect to that. So you can plug into the traditional rails fairly easily. But even that, as I said, there are so many different FIX standards today. But it does help, and then the same goes for market data. But I don't think that that's really the barrier to entry right now. It's more around, you know, how do you get the service levels, and how do you get the order types and the other strategies that you need to be able to connect to these markets.
Okay, Ron.
Thanks, Pete. And I think, you know, just following on what some of John's talking about, those service levels are critical. But the Bitcoin exchanges, they get it, right? I mean, a lot of the firms mentioned earlier in the presentation, a lot of the folks on the call, a lot of the professional expertise understands the need for adopting to some of the existing protocols in the financial markets. It's not the world of docs anymore, for example. It is professional exchanges understanding that they need to integrate into the workflow of how financial markets work now.
Okay, and to finish with you, Garrett.
Okay, I try not to jump in that time. Okay, so, well, if you want to, be a party to an already gentrified institution, you have to speak their language. So, the FIX protocol contains a lot of information, and every day it appears that we're adding FIX tags to get more information out of, of how the trade went through, where it started, where it finished, how long it was there, et cetera, and so forth. So I think FIX is going to be important. The itch more is how the orders are going to be placed. So I think in the institutional space, I think fortunately, fortunately or unfortunately, they have to conform to the particular protocols are currently within the institutional space. I think it shouldn't be a difficult transition. There's plenty of information out there on how to create that, create the right format. So I don't think it'll be a difficult thing to do, and many of the firms are already doing it.
Okay, yeah. I think you're right in what you said, that this is not in any way a barrier to entry, but I know there are some technology people on this call, and they're the people who are going to have to be engaged in this, whether that's figuring out the protocols from the crypto exchanges right now, or working with the crypto exchanges to get protocols like FIX operating. And I suspect the FIX has got a strong development community and business community around it. So I suspect at some point they'll become interested in the crypto space, and probably setting up a working group around it, or maybe the Wall Street Bitcoin Alliance will set up a FIX group within itself. I'm not sure.
At www.wsba.co.
Yeah, .co. So we're almost out of time, but we've got one question coming that I'd like to just try and touch on briefly, and it's if I can try and sort of paraphrase it, it's referring to, if you like, and I think you guys have mentioned this a bit during the call about the issues around the whole wallet structure and clearance of funds with exchanges, and it's really a question of how does the Bitcoin, the classic Bitcoin transaction speed, affect the way that Wall Street trading is done now, and could it be actually speed up that transaction speed, perhaps using some of the blockchain underlying technology involved a bit more? Maybe you, John, have got a view on that, because you're probably going to have to do something around it.
Pete, let me just understand that I got the question correct. That you said, how does the speed affect the trading for the customers? Is this from an API perspective, or are you talking about from the market?
I think from the market perspective. I think the question is getting at that the classic transaction speed of Bitcoin is anywhere between 10 minutes to an hour, depending on how many confirms you get, and how that could affect the way that Wall Street trading is conducted. And right now, there's this wallet structure which is sort of in place to, if you like, negate the effects of that kind of transaction speed. What's your view on what's going to happen there?
Well, I just maybe say something provocative, and I don't think that blockchain is the solution to every Bitcoin problem. If you're looking at trading on an exchange, you're not moving across the time you're doing that. And I think that there are existing structures that can solve the funds and the issue of the flow of funds between exchanges for those who need to do ARPs. And I think there are things that we will see this year that address those needs. With regards to, and the trading and the transaction, it really comes down to depth and liquidity in the market. And I think that even if you've seen in the existing markets where you have access to really low latency trading and you can do really high volumes, that only happens in really liquid stocks. And the strategies that you would trade and the need for speed, or even, and speed's really important when you need to adjust your price at the end of the day. And if you have an ability to understand or have a view about where the price direction is going, which means you probably have more alpha and insight that way, it's not that important. But as the market becomes more competitive, as the depth and the security in the market grows, as there are more market makers who are competing more aggressively, then I think that you can see that the speed certainly around the connectivity will play a bigger issue than it does today. And in terms of the speed of settling your transactions after you've done your trading on the exchange, just for the players today, that's not an issue, although obviously there is an issue more around, quite frankly, moving US dollars around exchanges and not Bitcoin. So I don't think that today is the impediment in the market.
Okay. Garrett, any view on that?
Well, it's interesting. When I think about the speed of execution and all that, I'm looking more at the more systematic type strategies. Those that are not as much. I think in the execution process, it's something they'll have to deal with for now until it speeds up. Like any I hate to say the word immature market, but in any new market, I guess I should say, there's going to be those growing pains, and as becomes need for faster capabilities, it will be built in. So, again, we are still at the beginning, and as people and firms start seeing the benefits of trading, or realizing benefits of trading crypto, I think that's when the markets will react, or the providers will react. As far as I can take this.
Okay. Any final words from you?
I think that.
Carry on.
Yeah, I mean, I if I'm looking at this question from the perspective of what I suspect is alluding to clearing and settlement, to John's earlier point, I think talking about blockchain technology to settle securities transactions, I think that's down the road. I think that's not particularly the most important thing from the perspective of Bitcoin trading, at least right now. But John, sorry, I think I cut you off if you had something to add.
All I was going to say is I think the market will be very clear about its needs, and the implementation of those changes will be driven by those market needs. I think we do have a view about ultimately where we think the market is, and there are people that are pre-positioning and creating solutions and making changes so that as the market evolves, but ultimately the market is going to dictate what happens and when, whether it's high frequency, low latency trading, whether it's more ARB strategies solving these clearing problems. And there are evolvements in each of these areas. But I think in terms of when they come out and how important they are, when the market screams to them and when those with the capital to apply, and the customers that are going to need this are going to insist on that, that's when they're going to happen. And until such time, then I don't know that they're that much of a need.
Okay, so I think with that, thanks for all those comments from all the panelists, all of your time. Well, I think with that we are completely out of time. In fact, we're running over somewhat, and so I just want to do a very quick, brief wrap up with some housekeeping. Next episode, I hope, will be in May, and really looking for your feedback on ideas for topics for that. If there's something covered today you want to know more about, or if there's some entirely new topic, please get in touch. There's our contact information there on the slide. If you want to talk to contact John about Noble Markets, or Ron about the WSBA, or just chat about the world with Garrett, you can contact him. If you want to have any general feedback or contacts, come via me. Any questions that you come up with after this call, send those in. We'll try and get you some answers as well. As I say, the replay of this will be up within about 24 hours, and we'll send an email out to everyone who registered to tell them that. Please keep in touch with what's going on in this space. Cryptomarketstech.com is a great place to do it. And also, if you're interested in this technology called blockchain, that's the technology which underpins Bitcoin, but can be used for many other things, then there's another website called Blockchain.io out there, which is just getting going. So hopefully you'll be able to use those resources to keep updated and help. Hopefully, sort of this show and those resources will hope to sort of guide you and advance your own plans in this very exciting space. So with that, just leaves me to say thank you to the panelists. Thank you to all of you for your time in attending. Goodbye. Have a great day.
Thank you.